So, no need yet. So, because we have a great line of speakers already. So, we are going to talk about deal sourcing with AI today. And the good part of moderating such a session is that you can ask your questions to the experts of the in the area. So, I'm going to use this chance and enjoy. And we have a great line of speakers. Keshvi from Balderton, Thies from Down, and please come to the stage. And Lukas from Speedinvest and Atte from NGP Capital. So now we can have an applause. Okay, let me open my questions. So I think you guys already well known in this community. So I'm gonna combine your personal introductions with my first question to save some time. So while you are introducing yourself, can you also give us some background about what you are doing with AI and data in your organization? Are you building products, fine-tuning models, or building models? Your stage is yours. Yeah.
Hi everyone, I'm Keshvi. I head up data and product at Balderton Capital. For those of you that don't know Balderton, we are 25 years old this year. So we're quite old in the world of venture, and we're a generalist multi-stage fund, so we invest anywhere from pre-seed to pre-IPO. To answer the first question, in terms of what we're building and sort of how we're working with models, we've very much taken the approach of what we can, we buy, we leverage what's off the shelf. A lot of the existing models, Claude, Gemini, the GPT models are actually doing a really good job for us. So where we're fine-tuning is more on the prompt side of things, and actually that fits into our workflows really well. So anything from receiving pitch decks, turning them into structured information, receiving board packs, turning those into structured information, labeling data points, all of that kind of stuff. It's mainly actually prompt engineering for us rather than fine-tuning models.
All right, hi everyone, and thanks Mustafa. So I'm Atte Honkasalo. I'm with NGP Capital, VP for Data Analytics, running our small data team of two people. And at NGP Capital, we are 20 years old, and we invest at Series A to Series B and Series C, sorry, with the sweet spot in Series B. And we are a global firm, and we are a thesis-driven investor. Investing based on our thesis of convergence between the physical and digital. And about the usage of data and models at NGP. So I think a couple of parts, of course, to that question. But first about the models. So same as Keshvi. So we use off-the-shelf models, especially when it comes to the language models. So I don't see much benefit or much like gain that we would gain from training our own models, or for example, even fine-tuning models at this moment. But there are still actually, for us at least, a couple of, let's say, more traditional machine learning models that we do train and do run in a recurring way. And coming to the what we use machine learning for, AI for at NGP. So the tasking is really in a sense, the whole investment process, starting from sourcing all the way to portfolio support and ultimately, hopefully, exit. But of course, it's more some stages than other stages. So, for example, I've been with NGP already for 6 years. We started from a more sourcing-heavy operation, also because of the maybe kind of the technical limitations and fit at the time. But now with, of course, I guess, like all of us know, Gen AI agents, all that available. So been building increasingly more at other stages as well.
Hello, name is Lukas. I'm the product and tech manager at Speedinvest. Probably most of you are familiar with us, but we are like a pan-European fund, also increasingly emerging markets with roughly 400 portfolio companies. Fun enough, we are the youngest fund here. I mean, not sure about you, but we started in 2011, so super recent. Yeah, how do we use AI or more data specifically? Especially for relationship intelligence, data is super important. We have but that's very loosely termed now, 200K network all in Europe. but with network now, I mean everyone we've basically talked at least once, but to really identify what is our network actually when it comes to startups, portfolio, and portfolio, well, obviously you have a network with your portfolio, but actually who do you talk with at your portfolio, from people managers to CTOs, anything beyond the founding team. We really utilize data here a lot to enhance the workings of our portfolio success team. Then obviously when it comes to other VCs, our investor landscape, can we actually connect with when it comes to co-investors and so forth, and to really leverage our contacts there. And then more and more so on the internal fundraising side. So that's important. Of course, what was mentioned before, deal flow sourcing, it's bread and butter of every VC, and there we try to, or have actually, I would say, succeeded in building our proprietary scraper. That's how we source a larger, that I don't mean a majority, but increasing share of our deal flow. We look at, in total, roughly 10K leads per year, and more than 10% of that deal flow by now is scraped through our, well, sorry, I'm a little bit redundant, scraper, but I can talk about this later. Yeah.
My name is Thies. I lead data tech and AI at Dawn Capital. We're a $2 billion European B2B software investor with 14 unicorns, I think, as of last week, to our name. The ambition for the tech function is a 3-person engineering team is to elevate every piece of Dawn through technology and AI. The place where we've gone extremely deep is on relationship intelligence. There's 2 main products. One, when we have a interaction, so we have a meeting or we have an event, we've built multi-model, multi-agent products that help us be smarter in those meetings. So it will tell you what does the founder do, who are the competitors, which other companies have we looked at, etc. And the second piece is we have a massive knowledge graph of everyone we know, how we're connected to them, including WhatsApp relationships and board relationships and that kind of stuff. It's been a 2-year build that help us understand how could we get to a certain person, a certain angel investor or an LP much better, and also who are the nodes in European and otherwise ecosystem that we need to keep close. So we can basically do sales ops with relationship and be a lot more data driven in terms of who do we invite to the annual ski trip and not.
Cool, thanks. One practical thing, so you can use Slido and with that code to ask your questions already that we are going to select at the end of the panel, so you don't have to wait for that at the end of the panel. So in this first part, for which we already spent 12 minutes, I have questions which do not aim a person, so I'm going to shut out the question and then you can pick one of you, and then we will have some more specific questions. One of my questions is about, a bit of background. So we have been discussing data-driven VC for a while, back then 7 years ago maybe, and with AI we shifted directly to AI-driven VC investors, and I feel kind of a pitfall that we are missing. There is a pitfall that people are heavily focusing on AI and forgetting about the data fundamental layer. How do you look at this pitfall?
This is my favorite topic. This comes up a lot for me, I would say, every day. And the analogy that I like to use, and please forgive me, it's really cheesy, is when we're talking about using AI, we're all talking about, I want to drive this really cool Ferrari. And a lot of us don't have our driving license. And that's what I term by having those data foundations really solid. We all know that, LLMs hallucinate, right? And they tend to hallucinate when they have lack of information. That's when they try and bridge the gap. And one of the things that makes all of our jobs really hard is that the data that we're dealing with in venture capital is often imperfect. We deal in the gray areas. We deal with patchy data. It's not clean. We talk about entity resolution all the time. It's very boring. But ultimately, if you don't have those solid foundations in place, you can't make the most of your AI. So if any of you are having ongoing conversations, particularly with your GPs about, okay, we want to apply AI to X, Y, and Z, please draw their attention to whether you have the foundations first, because otherwise there's no way you can drive that Ferrari.
Does anybody want to add a bit, or shall we go? Okay.
Yeah, maybe I can add a bit. So Yeah, very quick. So I noticed like also what you see, for example, in product demos, in the demos of the like big players, OpenAI's, Anthropic's, whatever. So I noticed that people are a lot of people in the industry are kind of used to seeing those, and some of the stuff that happens there looks like magic. So that also kind of might raise the expectation levels. And at the end of the day, a lot of it is the boring stuff. So actually managing your data set, making sure that you capture all the interactions and so on, and that's boring, and that's kind of hard work. So there might be what I at least feel is that there sometimes might seem to be a increasingly large expectation gap on the kind of between the magic and actually the big groundwork that you need to be doing.
Perfect, thanks. So another question in the first part also about past and now. Before we have been trying to cut through noise on the financial statements in pitch decks, like what is true, what is not, and now it's kind of the new pitch deck for startups could be the digital footprint, because we are using all those data, right? And do you have any ideas how can we cut through the digital footprint noise for our models?
Take it in a slightly different direction. So when I joined VC, my favorite movie was Moneyball. And Moneyball is a movie that features Brad Pitt, for those of you in the audience who want to watch a movie just because of Brad Pitt, which is, I think, a pretty good reason. It's about someone who uses data to find basically diamonds in the rough, to find players that everyone else overlooks. And I came into VC quite smug and think, well, I'm an ex-Google engineer, what do these people know? And like, we're going to use ML, and I'm going to find all these amazing winners in Crunchbase and in PitchBook, and et cetera. And at least for us, we're Series A, Series B investors. The best information we get on a deal is through relationships. The best way we get access to a deal is through relationships. The best way we get a tip-off, which in public markets would be super illegal, right? It's like if I have a contact at the board of Tesco who says you should really buy now, like hopefully we're both going to jail. In private markets, this is just called VC and networking. So I think the exciting thing for us has been, rather than try to get some kind of unbelievable pattern from inbound pitch decks, and we've done a lot of plumbing so we can benchmark stuff accurately to have better and smarter IC discussions, but the real thing that's created DPI and helped us get into deals has actually been able to figure out which relationships really matter, how do we keep them closer, and also which of them can we leverage when we get really excited about a founder, so that somehow all the board members say, hey, you should really look at Don, they're really great. And then the angel investors say, hey, Don is really great. And that our head of data gets a ping from the previous CEO or CTO that they worked with that used to be a portfolio company of ours or is a portfolio company of ours, rather than ML basically replacing the human to sort of cut through the noise, if you will.
Perfect. So, Keshvi, I think we have been, within this community, VCs are getting progress in the sense of being data-driven. So it is not the same as like 5 years ago for sure. But what I sense also in my discussions with many people, that the product mindset is still lacking, and it is really unforeseen. How do you approach that?
I couldn't agree more. And something that I've learned the hard way since I joined Balderton is that actually it's not just about having these great data tools and having all of this amazing information. It's about people actually using them. I can't tell you the number of times we've had discussions in the data and product and VC community, and someone's built the most amazing product. I mean, we all look at it and we love it. And they say, yeah, but I'm really struggling to get my team to use it. They don't log on, they don't engage. And ultimately, I think the way to solve that problem is to go back to product fundamentals. I'm a product person, I would say this. But to say, okay, what is my user's pain point? Where do they work? And try and meet them where they are. I can give you a really good example of this. Our best sourcing tool is an email that goes to investors on a Monday morning. It's nothing flashy. There's no web app. There's nothing, incredible UI. It is an email, but it works because investors are time poor. They're on the tube into the office on Monday. They get their phones. They look at the list, and that's how they start their week. And the reason that I'm telling you this story is to say that I think this product mindset and really thinking about your user, who are you targeting, how do they work, is really how you change the game. You need to build the great technology, you need to find the great data signals, but someone needs to use that product.
Yeah, interesting, thanks. So maybe we can continue with Lukas this time. So Lukas, we are as VCs, we are not VC, we are impact investor though, but you are as VCs betting in the team as well, right? The founders. So it's kind of a dichotomy of if investing is art or science. But do you use, or can we use some spatial methodologies, data methodologies to assess founders?
Basically, that's all we do. I mean, it really depends on the stage, but we are early stage, right? We mostly invest in pre-seed and seed. And therefore, let's say on an entity level, or we can call this an organization level, there's very little data to begin with, right? Most of these companies are pre-revenue. Yeah, you can do, obviously, and you should not just do, but you have to do a market analysis. But on the company level, there's really only the people, the founding team. And our scraper, for example, is purely based on people data. So we look at, what are the founders' profiles, where did they go to university, especially their past positions at specific companies, what's their age, etc. So really those are the data points we try to look at to identify those mysterious people on LinkedIn, essentially, who have stealth in their profile, and not obviously to push them all into our CM, but really identify the ones that fit the best. Obviously, there's a lot we can do there going forward, especially I think one of the most interesting points is how compatible those founders are. So, it's one thing to identify a strong founder, but vis-a-vis the second founder or maybe the third founder of the team, how do they interact? It's not like they all get like 90 out of 100 points and then you have 270, but how do they actually match a good team? That's really important.
And do you have also a special focus on diversity when you're evaluating?
Yeah, I mean, that's a point where AI also has a lot of pitfalls, right? Because AI is all about pattern recognition, and obviously we just don't want only to find the founders who, let's put it that way. There's a strong danger that through this measure, you then just found founders who are not diverse. So you really need to keep this in account, and right now we have not found a solution yet with AI, but I think that's something we need to implement next year, where we, let's say, bring diversity aspects into our models. Right now this is mostly a manual process.
Yeah. You're going to add to that, or? Yeah.
I think we do one thing really well on the diversity side and one thing really poorly on the diversity side. What we do very well is at Dawn, at every level, including GP level, there's female representation. So more than half of our VP plus investors are female, which I think, especially for a growth fund in London, I think for any fund in London is quite rare. However, a lot of the profiles do tend to be, for example, ex-consulting, ex-banker people, because those are the people that can sort of do the number crunching and the operational stuff, especially when we do like a Series B investment at the level that is necessary to be a successful fund. I think one of the most exciting unlocks or visions we have for the fund in the next 9 months is that AI can help do some of that number crunching and processing and get through data rooms and do TAM analysis at the caliber currently of a fantastic banking associate, so that we can free up and do our hiring from more academically or professionally diverse backgrounds. So you can get people that are actually more sort of hustly or better at getting in front of founders or think more out of the box, or that you can sort of widen up the scope there rather than needing to basically hire so many former bankers and consultants necessarily.
Yeah, well, that brings me to another question about relationship intelligence, because we all know that you maybe introduced even such tool for the first time in this community. So I would like to ask kind of how do you ensure that you are still discovering in new relations than biasing existing network biases?
So I think here being data-driven and using technology well massively improves how we do it. So when I joined Dawn, I asked who are tier 1 angel and pre-seed investors, because we typically, like a small check for us is 8 million. So we're just later than many. There's a whole ecosystem that's earlier than us. And I asked who are the top 10 in, say, DACH. And I asked all the different partners and GPs, and I would get 10 different funds, and I would get a different list of angels and people. And I would ask, well, why is that? And they're like, well, I think they did N8N, or I think that, it's really anecdotal. So now, because we have this massive knowledge graph, we run an analysis every month, and we can uncover who are the rising star investors or rising star angel investors, even if they don't go to networking events, even if they didn't go to Oxford, even if they're a woman, even if it's much more meritocratic in terms of how we identify who we keep close and who is important to us to keep close. And we basically run through that list that I see. There's a qualitative overlay, because some people we're not close to because they're not nice people or for whatever reason. But also sometimes there's just really misses, right? And you're like, oh my God, I've never heard of that fund. But they must be a tier 1 fund by definition, because they've done 3 deals on our target list, 2 of which who we lost. Maybe they are tier 1, right? So I think data can actually make things much more meritocratic and jump over a lot of these biases that people have with relationships.
Okay, thanks. So looking to the time, I'll skip a couple of questions I wanted to ask really, but let's continue. Atte, to you. So I believe that the added value of data-drivenness is shifting towards more later stages of the pipeline to portfolio management. Although there is kind of a belief that depends on if you are investing early stage or later stage, but I still believe in that way. What do you think about that?
Yeah, so I do agree and disagree with that statement. So for sure, I mean the balance of the let's say or the focus of work within data in VC, I think, is definitely moving to the latter stages, and that's probably, I mean, that's due to a lot of reasons, but I guess the biggest reason there, after all, is the fact that that Gen AI, everything you build on it, actually enabled a set of use cases that were not. So I mean, that were not possible before, or maybe there was something before that you could be doing, but actually the amount of possible use cases there has expanded, I don't know, by an order of magnitude. It's tenfold from what it was before. But anyways, I think we are on a panel about deal sourcing with AI. I'm actually not sure if it says that behind me, but that's the topic anyways. But I think there is still some value, especially if we kind of narrowly focus to the sourcing stage for the. So I think there is still a kind of value for the, let's say, the more traditional ML type of approach, where we look at tabular data, we look at like big numeric data sets, and we try to find signals from those. So those are not necessarily like the most engaged. So, what I seen, for example, from those signals, we can, for example, get a lot more companies. We tend to get false positives, more companies that we can actually look at and so on. But I still think that at least some part of the funnel to kind of discover companies that we haven't heard of before, I think there is still value for that part of the process as well. But I mean, to answer kind of your question, so I agree with the statement, but I think there is still value in the sourcing phase as well.
Anybody would like to add, or shall I? Okay, I have another question to you, Lukas. If a partner asks you why the model did pick this company or this founder, how would you explain that?
Well, honestly, if the partner came in, the company would already be reviewed manually by that stage. So just to be honest, right? So we have our deal flow pipeline, and the partners usually come in at, I don't know, shortlist candidate. So their manual process would be involved. But if they actually had that question, hey, how did this company end up in our deal flow? Then we would really look granular at the sources. Also go to the respective person LinkedIn profile, anything we can find publicly, and then try to establish, okay, this is founder X, and based on these publicly available data points, you can see why our scraper picked this person up. So I think, and we have high confidence that if that scenario comes into place, we would be able to show those sources to them. Yeah.
Maybe to add a funny thing, that's a question that I feel like usually isn't being asked when they get a great company.
Okay, yeah, fair point. So I would like to continue with Keshvi. At the end, the product team or the technical team aims to provide powers to investment managers or business to make better decisions, work more effectively. But what if they don't feel the urgency for that? They are happy with the work they are doing. How would you proactively promote this and experience?
That, I think, it's a really good question. The way that I've decided to tackle this is I've sort of split all of my customers, our investors, into sort of segments. So there's always going to be a group of people who love product data. They'll always try the new tool. They're super engaged. And those are my champions. Those are the people I will build product with, who will then go and talk to everyone else about it and tell everyone how great it is. It's really easy to get them using the product. Then there's always going to be a group of people who I call take it or leave it. So they don't mind if it's helpful to them and they don't have to do too much work, then they'll engage, but they're not going to proactively go and try out every single new flashy thing. And to engage those people, I will proactively go and work with them. So we have quarterly demo sessions, which are sent out to the whole investment team. You know, here's a meeting. I'm going to come and sit with you and show you everything. And you have to put in quite a bit of work to engage them. At that point, hopefully my champions are helping me out. And then there's always going to be a group of people, and this happens in any business, this is not unique to venture capital, who say, you know what, I love the way I've been doing this. I don't really need to change. And this is super normal, right? This comes with any new technology change. At that point, what you really need is the top-down champions. So you need your partners saying, this is actively important for our business. We really need everyone to be using this. This is a priority for us. And I found it really useful to think about people in those three buckets, because sometimes otherwise it's hard to celebrate the wins and the people who are really helping you push forward. So to sum it up, leverage the team and think about what those different personalities are and how to best engage them.
It is like kind of building a startup within an organization. So you find the users and the problem and the solution, the first adapters, product market fit, right? Kind of maybe even investors within investors. Yeah, cool. You would like that?
I really can only second that. I literally sometimes go to people and say, you are my top soldier, because like I'm always proud, like a dad, when someone like actually does data work on their own, has their own initiatives, and yeah, there are indeed these three groups of people. I think one way to market this is always like, and I often fail at that myself, honestly, but how is this not good for Speedinvest or for the company, but how is this good, this data input and this data work for your own career? So let's say, I don't know, you look at, let's say, all the corporates we know, right? All the big corporations we know. Let's collect a big list there. Let's really try to make this data intelligent for Speedinvest. Okay, that's fine, and you will have your power users who really utilize this. But what if I tell the IMs, hey, do you want to know what are the big corporations, let's say in health, that you have a network with, that you can leverage for your own career, even if you maybe move on from Speedinvest? And then they actually understand often, okay, now the time has come for me to really leverage all the tools that I can use at Speedinvest to grow my own network. So make it a little bit selfish for them.
Yeah, I couldn't agree more. I think that's super, super important. One other thing that I would add is it's not always about who shouts the loudest. So I would really encourage you to look at who's actually using your product, not just the people who tell you they use it or tell you they like it or don't like it. I found often there are people who don't really express opinions vocally, but they're my power user who are moving companies out of the inbox that we're generating all the time. And they can have some super valuable insights too. So look at the usage data.
Maybe you already recognize that we are diverging from the general topic, but still fun. So I would use my chance to diverge more. So Thies, I think I'm gonna change my question that we already had, because you already answered in the first part. So I'm gonna have another question just pop up to my mind. So this best of breed versus platform approach is also still a hot topic. Also because the many providers try to be the platform for VCs. I still believe it is not happening. So what is your takeaway from that?
I think anyone that's spoken to me at one of these conferences for more than 5 minutes knows how much I hate Affinity. I really hate it with a passion. I know it's the least crap thing in the market. I still hate it with a passion. I don't know why the entity resolution is so bad. Why can't I do outbound? Why doesn't it sync with LinkedIn? Like all this stuff. I'm like, you've raised $120 million. So what we've decided is we buy Affinity, and then we just do all the stuff that I wish Affinity would have done with $120 million, and we do it in-house. So we do automatic status updates, we do the entity resolution through the API. So you buy something that's like 90% there, and then you build a bunch of glue on top. I think building your own CRM would be madness, unless I'm ever going to raise, in which case I think you know what I'm going to build. But I would highly recommend people to buy what they can and then go really deep like we've done with Rolodex and some of these things. I think people have lost, like 10 years ago, people knew that really good software engineers were really rare and super valuable. And now I think everyone, especially non-technical people, think you can vibe code anything with Cloud Code in a weekend. I'm like, you don't even have VS Code on your computer? Like, why do you have an opinion that's this strong? Tell me how I feel. So I think there's, but for one thing I've learned is because not every software investor is a software person fundamentally, you need to pick where you go, where you build something excellent, and then build something excellent, and then buy what you can off the shelf. Yeah. That's my rant.
Yeah, and also a bit more detail on that regard. Maybe you or maybe some others. So it is kind of a buy versus build, but my point also, if you would like to buy, if you focus only buy. So would it be best of breed kind of very specific tool for very specific purposes, or one big tool to manage everything?
I think it needs to be broad enough. So if you have a finance tool, we have gone with Vestberry as of 3 months ago. Vestberry is broad enough for the finance suites that finance can do cap table and portfolio reporting, and like it can take care of enough of that piece as it can. Affinity can do enough of the CRM bit. I think if we go just point solution, then that doesn't work. But there are some point solutions, for example, that do a LinkedIn sync to Affinity that we have then bought and then integrated with Affinity.
Yeah, I'd agree. So I would say composable in the application layer, but platform in the data governance fundamental layer. You would like to add something, or shall we go through?
Yeah, no, just very quickly, how fast you can implement it to as many people as possible, because right now there's always this uncertainty. Well, if I buy this now, can I not build this in 4 months, because the market is changing so quickly, especially with AI-enhanced or AI-driven tools. But yeah, I think sometimes this uncertainty leads to just procrastination, and therefore, if you are confident that you can implement a tool to the wider audience in your team fast, then go for it, if budget allows.
Yeah, maybe a very small add on my side. So I know this being kind of doing this for 6 years, and what's been happening at the increasingly fast speed recently. So I noticed there's also the decision like you build something, but I guess someone talked about it in the morning already. So what's actually the shelf life of it? So, or how long should you continue running it? So, I mean, a lot of the things that still kind of produce value, produce like outsized advantage to you like 2 years ago, 1 year ago, even 6 months ago are now kind of commodities. So that's also, I guess, when you build, that's something to keep really a close eye of.
Okay, so I would like to ask a small question to each of you this time. So what do you think is the biggest misconception of AI in VC? Starting from Keshvi, maybe.
God, that's really difficult. I actually think the biggest misconception, at least for me, is that in VC, AI, or particularly LLMs, are best applied on numerical applications. We've actually found the most value to be in more of the kind of file, lots of PDFs of unstructured data, text, summarization. That's where we've found the most value, and the kind of less obvious and less eye-catching applications.
All right, thanks for giving me some time to figure this out. But yeah, I think, I mean, when I started, there was a lot of this like kind of aligning with Keshvi here. Keshvi, so I think there was a lot of this like find me the best companies, but and of course, I mean that's interesting. But on the other hand, we know that we are able to do that quite well. But then we also know that we get a lot more best companies than we can invest into, and that's when it actually gets practical. So there's a lot of other things afterwards. So how you actually select the companies from that pool, and especially how you kind of in a sense like avoid the adverse selection bias there. And for example, I think access with the which is something that I think this has done maybe the best work in the ecosystem. So I think that's at least as important as just being able to discover the companies.
Yeah, so it's, yeah, I mean, I know it's the title of the discussion, but it's not just about deal sourcing. So AI can be implemented, as Keshvi just said, very much for internal processes and finding sometimes very messy internal data. So there it becomes super useful. And for an early stage fund, I think beyond deal sourcing, it's very valuable for your wider network, because as mentioned before, like your portfolio companies, but especially on the corporate side, there's much more data on those, hopefully, and that data can then be enhanced significantly with AI. And then those little things, right, like AI note takers, super useful. I mean, I know that, well, basically there were no notes at all for half the IM team before, or you basically had to hire a detective to find those notes somewhere in random Excel files. So now I know one partner who's been doing like 300 notes recently, just in like 5 months, and they're all in our CRM. So that's extremely useful data, and yeah, so yeah, it's those little things that really enhance certain processes.
I think just because I'm aware that I'm at the luxury where I'm at a larger fund. I've been doing this for almost 3 years, and I have a 3-person team, so I have the luxury that I can build differently than many people in the crowd, where you're basically the only person fighting against the onslaught of brilliant ideas from the GP that they had this morning on their way into work. One thing that I took for granted when I was at Google is as a data role, I could say, well, I do my bit really well, and if there's not much adoption, as Keshvi said, then it's kind of the product manager's problem to solve, or the VP's problem, or the director's problem. When you are the only person at the firm, just be really proactive about driving adoption and being the internal cheerleader, and I guess learn how to basically give TED Talks regularly in terms of making sure that people are aware of what you're doing, that it's exciting what you're doing, and that you over-index on this enablement, rather than like, if I build great software, everyone's gonna love it.
Perfect. So we have still 2 minutes before the questions. If anybody of you, any of you would like to close this session with more thoughts, I will give a mic to him or her. Otherwise, shall we go to questions? So nobody added questions in Slido, which means that you would like to speak up. But please with mic, because we have a live stream. Any questions?
Yeah, I actually have 2 questions. First of all, as Mustafa mentioned, when the partner asks, he doesn't ask why this startup or person is in our pipeline, but he asks why it isn't when after he sees the news going in, like in the work on the tube or anything. So how do you make sure you cover a lot of space, or at least sleep at night? You know that you cover a lot of spaces, and you have all of the good startups in your deal sourcing area.
There's a strong latency there. So we have a thing called Series A coverage analysis. So where we look at how many future Series A's we saw before, well, they raised Series A, because we are an early stage fund. But obviously this requires quite some time, because especially for the companies that we scrape, those are super early, so those are all pre-seed. So yeah, this is like has a up to 2-year, 3-year latency, but this is super valuable because then we can really see in what geographies we saw, what sectors we saw, what are biases. To give you one example, I mean, sorry, I'm going on a rant, but my IMs, they often have the right gut feeling. They often work with gut feeling, but it's just a gut feeling, right? So to give you one example, Italy, we very rarely looked at Italian deal flow, and we thought, well, there are no good Italian companies, essentially. I heard from some unnamed sources. And then I was showing them, hell, you know, there are still more Series A's in Italy than in all of Eastern Europe. I think that was in 2023. And there we really now pushed Italian deal flow, and we now increased it 3x in the last couple of years. And these are sort of these biases then that you can counteract with that, but it requires plenty of time because otherwise, yeah, you can't prove it earlier than that.
I can also chip in on this one in terms of how we handle it. I think there are always going to be these cases, right, where you haven't managed to find a company and someone has. But the thing that we consider really important at Balderton is being able to really quickly tell someone why, and then to fix the logic so that in future we can cover those cases. So what we've really optimized for is traceability and transparency with whatever we build. So whenever we bring in external signals, we actually download the whole database into an internal warehouse. And all of the filters that we've applied are really, really easy to find. And we actually expose those filters into our CRM as well. So if we've pushed you a company, there's little tags saying, this is why, you know, here's the signal. And that way we can really quickly say, hey, this is why we didn't find this company. Why do you think it's great? Okay, because the founder came from company X. Let's make that change now. Because this whole sourcing idea is a constantly evolving machine, and we've just got to be able to keep up with it really quickly. But I think you build trust by being able to explain really quickly.
Okay, great. My second question, if I may. So you've been in the trenches for the last couple of years, built many apps and probably scraped many apps and features too while building it. So what is something you would start with, and what is something you would not bother at all, knowing all of this right now with like all of the AI and everything?
Yeah, it's actually a hard question, but I guess starting a new project. So I think what's important, of course, is to deliver some value in the beginning as well. So that kind of keeps up the interest. So even though we talked a lot about the importance of the groundwork, I think it's kind of important to get to the actual value and actual use cases and fulfilling them kind of quickly. But then the other thing is that. And I think it's been mentioned a lot of times this day as well, is the kind of the importance of the data asset. So I think a lot of the tooling is actually somehow becoming a commodity. So in a sense, like I mean, the tooling that anyone can use is as good as what the best can use, in a sense. So there isn't much difference there. So the other is to start building the data asset in a way that I mean persists. Whatever you do. So for example, I mean, it's the boring stuff. You get the company deck, maybe save it to Dropbox, you get a note, maybe put it somewhere where the team can access it. You interact with the company, remember to kind of click it in the CRM. So I think that's the kind of the basic things that matter a lot.
Other questions? Yeah, Francisco.
Well, first of all, thanks. That was amazing. And the problem with having so many cool people doing technical things on a panel is that you want to ask them, how do you build investor ranking and like all these kind of things? And it's very easy to overlook the non-technical comments, right? So I just want to like attach to something that you were saying before. You say something which is like exactly what a product person would tell you. You need to meet the client's needs. You need to meet them where they are, right? And that works for any product in the world. Now, VC, it's a product, but it's also not a product. And part of your job, part of my job, part of like many people's job in this room is to make the team better. So you meet them where they are to make sure that they use what you're building and so on and so forth. How do you all make the teams better? How do you get them out of the comfort zone and using whatever tools and pushing them to the next level, like the investor V.2 kind of thing?
So I think whatever we can, no matter the complexity, whatever we can push back into Affinity, whatever we can push to email, whatever we can do in Slack. So making Slack bots, even if the infrastructure underneath is really sophisticated, has been very important. I think the second thing is to, as you mentioned, realize that. I think the second thing is at Google, a lot of engineers love new stuff, and they love new stuff for it being new, and they don't mind completely new UXs and workflows and all that kind of stuff. I've learned the hard way that you have to go very deep, and if you are going to introduce a new way of doing things, it needs to be like 10x better than the previous way of doing things. I first thought, hey, if you have this really painful research task and it takes you 2 hours now, and with like 6 different prompts I can get you to do it in 30 minutes, I can already tell you the adoption is going to be close to 0. So that's also why we go much narrower. We basically pick one big thing to ship every month or 2 months, so that also the time to value is fast enough.
I can add in that I completely agree with you, Tis. I think making sure that you're really, 10xing the value of what you're bringing in order to kind of make that trade-off, or I want you to go through some friction, is super important. I would take that to another level, that whenever you're trying to deploy new technology, it's all about give and take, right? You're working with human beings, and certainly our values at Balderton are that venture is ultimately a people business. We have great investors. That's what makes us a great fund. I'm just giving those people superpowers. So I can give you a really good example on notes, right? We've all been through the pain of, why aren't people putting their notes in Affinity? We approached that by saying, okay, you know what? I'm going to take 70 to 80% of the pain away from you. I'm going to do all the IT, all the legal, all of the DD to get a meeting transcription tool in. So I'm going to take away 70 to 80% of the notes you have to write. But I cannot be there when you're having a coffee with someone at a conference. So if I take away the 80% pain, I now need you to do the 20% and write those notes. And I'm going to chase you for them. And I'm going to build all of those processes to make sure that happens. But I think it's all about give and take at the end of the day. You have to build trust and you have to engage people in order to then get them to do something different.
Maybe last question, because we are already out of time.
Thanks. So building up on what Lukas said about gut instincts of investment team, well, a lot of people that come as a data engineers are not from VC background. And how do you deal with the biases of investments because you build the products on their own gut feeling? And how do you make them a better team? And how do you make them broaden their horizons? Besides 3 years of collecting the data.
I can start on this. Something that I found really useful is really questioning investors on this idea of gut feel. I am that very annoying person that will just keep asking why. So if they say, I just know this company, I knew they were going to be good, I just keep asking them why and help them do that self-reflection and interrogation, because ultimately you can't write code on gut feel, right? You can't codify that. And actually people a lot of the time when they think about gut feel, there are patterns that they've learned that they just haven't sat there and reflected and thought about. And that's ultimately what we're trying to build products and automations around. So it's very boring, but just keep asking why and be that annoying person until you get to the bottom of, okay, what are those data points you've noticed that you don't even realize you've noticed?
To use a very corny line, but you gotta champion the champions, as in the people who really utilize your new processes, your new tools. You need to show how they succeed by doing that. And it's one thing of convincing the entire team, oh, this is a new great tool, that's quite difficult. But if you can actually show 6 months later, there was someone who got promoted recently because they really utilized for deal flow sourcing or for their portfolio work and these new tools that we implemented, then hopefully some other people get the message. And I think that's super important. So sorry for the corny line, but that's really important.
I think on the data piece, as Lukas said, I think you can use data to sort of expose certain biases, and this shouldn't be confrontational, like, haha, you're wrong. But I think some of this fuzzy thinking just doesn't get pressured enough. So for example, when I joined on, I would get different, I asked people, what's our MOIC on average on initial versus follow-on investments? Or like, do we do better early stage or later stage? Or does the percent ownership we get at the beginning, does that really matter in the outcomes? Like, do we need a big ownership stake at the beginning to have a big outcome? And I just got really varying responses from the different partners on this. So you can sort of crunch numbers, and actually turned out that we're, for example, fantastic follow-on investors. We actually do better on average on follow-on than on initial. I mean, this is like VC heresy. We don't necessarily do bad when the deal is really cheap. I mean, if you're buying stuff, this sounds like a no-brainer, but in VC land, if stuff is expensive, the FOMO is much higher than if it's cheap. Ownership stake, actually, if we would have not done stuff where we don't get 15% ownership stake at the beginning, we would have missed out on every big investment except for one. So I do think that coming in with a non-VC background, and if you crunch some of those numbers as a project, and it's more Excel work often for this type of stuff than pure data engineering. But because you have a data engineering mindset, I think you can come up with insights, similar to what Lukas said, where he said, actually, you know, Italian's not just pizza and pasta, it's actually like more Series A than Eastern Europe, where, you know, Revolut is from. And they're like, oh, that's, so I think that's where having an outsider perspective really helps.
So thanks, that brings us to the end of the panel. So hopefully we meet next year somewhere in Milano, maybe? Oh no, Berlin got ahead, so come on, Italians, please. Okay, so a big applause to our speakers, and see you next year. Thanks.